Welcome to Strategies to Accelerate Growth, a video series featuring CohnReznick's private equity professionals. Hi, I'm joined by Jeremy Swan of CohnReznick. How can private equity firms best position themselves to achieve growth in today's market?
Well, I think there are two aspects to it. There's one, the private equity firms that are going after the new platforms. And what they really need to do is differentiate themselves in the market. And that can be through industry expertise, having the right team involved, the right operating team to really show that they know the industry and they can provide additional value to that potential portfolio company versus the competitors, the other private equity firms, in a lot of cases today, the strategics. Because the management teams that look at a potential bid and say, you know, the best bid for us is the highest dollar amount, that's going to be tough for a lot of the private equity firms to compete with. The ones that are looking for the right partners, that's where the private equity firms can differentiate themselves based on their expertise to really be that best bidder. The other thing is, when you look at the private equity firms that are focusing on growing their portfolio companies, there's a lot of operational work that can be done. There are a lot of lower middle market add-on acquisitions that are available out there that are quality, that may be at lesser valuations. I think the overall challenge that the private equity firms have right now, whether they're looking at add-ons or looking at new platforms, is they're looking at businesses. And they know the business is worth 6.5 times cash flow. But they know they're going to have to pay 8.5 to 9 times cash flow to win that deal. So they really need to focus immediately and understand, you know, where's the low-hanging fruit where we can take this business that we know is worth 6.5 times, but we have to pay 8.5 times. How do we make this business worth 8.5 times immediately post-close? What can we do to get that valuation there?
So for the private equity firms trying to create alpha today, what are the challenges that they face?
You can achieve alpha in this market by getting a deal at the right price, focusing on the right add-ons in the right markets, and understanding the strategy, which there you need the industry expertise and you need people who have deep contacts and knowledge of the companies in that industry. And then you need the right operational focus. And how do you really effectively improve that business and go back to the basics of private equity, and where you're buying something, you're improving the operations, and then you're able to exit it at a much higher multiple.
Is there any advice that you'd give private equity firms as they look ahead?
I think it's really looking at it from the lens of, if you're looking at a new platform and you know what the business is worth and you know you're going to have to pay a turn or two higher to get that business, really focus, starting from the diligence phase, where is that low-hanging fruit that you can start to address immediately post-close to take that business that you know is worth 6.5 times to make it worth that 8.5, 9.5 times that you have to pay for it. If you focus in on that and you build the right 100-day plan, you can really start to understand where the opportunities are, and you can make that business worth what you had to pay for it relatively quickly and start to remediate the risk of having to hold a company or eventually exit a company at a lower multiple.